Thank you very much for joining us today. Really nice to see so many people have registered for this event. And for those of you that don't know me, I'm Amanda Brandon, Director of Member Engagement here at the BVRLA. And this is our first Industry Outlook webinar of the year. Everyone I've spoken to from the beginning of 2024 has just had a flying start. It feels like nobody's feet have touched the ground. And we thought now with Easter approaching, it felt like a perfect time to kind of breathe and reboot and plan for the rest of the year. So that's what we're aiming to do this morning. I've got a stellar lineup of speakers to basically give you a whistle-stop tour of what's happening in the insurance market, what's happening in the technology space, why does ESG matter to me, and a quick update on our BVRLA policy programme. We've got a chance to quiz the speakers at the end in our panel session. And just by way of housekeeping, you've got the box on the right-hand side that I can see many of you are chatting in as well, to ask any questions. So put those in as the speakers go through. And as I say, we'll wrap those up at the end. Important reminder, competition law, you can see the slide on your screen at the moment. When you are asking questions, please do not mention anything about pricing, any terms of sale, profit margins, anything like that. Please keep your questions quite high level and generic, and we will aim to answer those at the end. So we are on a really tight timescale today. We're literally doing 10-minute but speedy presentations. So without further ado, I'm going to hand over to Alistair Warden from Towergate. He's going to give us a real quick update on what's happening in the insurance world. So Ali, welcome, and over to you.
Thank you, Amanda. Thank you to the team. So it's wonderful to be invited to talk. You must be doing the mantra of saving the best till last, putting insurance up first, but I'll try and make it as exciting as possible. No policy wordings, you'll all be pleased to know. Really just our headline thoughts on the current market as it stands in the self-drive hire sector. Insurance, like every other market sector, is pricing really driven by supply and demand, and that really has always been the challenge with the self-drive hire sector, in that there's only been a few insurers actually in that marketplace. Pleasingly, I would say what they would term as the more vanilla type risks, where it is standard vehicles, which to an insurer's under ABI code 39, or like commercials, the market is wider. There's certainly 4 competitive insurers in there, which helps and keeps current markets on their toes from a pricing perspective, which is important. That does get harder where certainly performance vehicles are involved, so over group 39, and certainly where any of the higher usages for hire and reward, whether that's courier or passenger carriage, that again restricts the market down and is challenging. Absolutely. The current markets are looking for at least kind of 3 years trading experience. So certainly new venture risks in that sector are very challenging unless it's coming with a good history of working in the sector, possibly. But what there really is a need to demonstrate the risk management practices that you have in place and your rental desk best practices. It isn't just a case of a claims experience and a schedule or a rental day forecast. It really is making sure that you're demonstrating across to the insurer that you've got good practices in place and are managing risk, as is always important. So the sector itself, in terms of pricing, again, like all sectors, inflation is driving the huge cost increases in it. And from a motor claims perspective, car parts is still seeing significant rises, both in price and more so, and has been more kind of damaging to insurance costs, is the delay in the repairs. Where that principally bites is where the vehicle's involved in an incident with a third party on a fault basis. The cost of the repair naturally is picked up for the third party, and also the hire car credit hire car, whatever that third party is going into. With the increase then repair times, those costs are naturally increasing. So there's been a natural increase in the cost of parts, and then with an average of about 11 days, certainly the stats up to the end of 2023, increased repair times, that additional credit hire bill is sitting within the insurance claims. Also, from a theft perspective, this had actually gone quite quiet a few years ago, seemingly, but has come back on to the stage. A lot of the time, it is for parts, stripping down, almost a cannibalising of the vehicle for parts due to the earlier points raised, as well as then just general theft risk. And I think I'm obliged to say it isn't just Range Rovers. I know they're having a real headline time at the moment with it. It's still actually the humble Ford Fiesta that's the most stolen car in the UK. But I think, yeah, the Range Rovers are obviously topical, and anything in that kind of prestige area, really. Also, large claims. So insurers, the way a rating of a policy works very quickly is they'll write what they call their attritional claims, which are the day-to-day incidents that are incurred in the experience. But what they are also protecting against is a large claim, large loss. This would be potentially that horrendous seven-figure kind of claim that can hit a policy, and they put into their pricing what they call an LCR, a large claim reserve. And in that area, there's been some significant increase in costs, driven quite a lot by care sector, where there is a personnel shortage. There is a capacity issue, and the cost of long-term care has significantly risen. Therefore, the reserves that they're putting need to reflect that, and that's driven price. And also the personal injury discount rate. Again, I could bore you for an hour with the maths of it, but essentially, if there is a large claim loss, the insurer can have a discount on the payment if they pay it in a lump sum upfront, and there's a recalculation of that discount that is likely to reduce. Therefore, again, they're looking at the pricing structure of there. All that combined, if you probably got the 3 or 4 key insurers on in terms of what they believe rate needs to do over the next year, is a plus 15% rate across their book values. That isn't to say that every risk is plus 15. We certainly see areas where the claims experience has performed well, and therefore has driven reductions in cases. But what we are certainly seeing is if there are issues on an experience, there can be significant increases that are coming in. But as a general rule, that 15% increase is where insurers' books seem to be going. To try and mitigate that, firstly, I suppose looking at your claims experience, the speed of a claim report is critical. What insurers call FNOL, first notification of loss, always a challenge of rental, and a fear why a lot of insurers don't enter the sector is that an incident happens on a Monday, but you don't find out about it until the Friday when the vehicle comes back. In that time, the costs can run away in terms of third-party repair and into hire. Therefore, the quicker you can encourage a hirer to notify a claim is key. We certainly recommend things like FNOL apps that the hirer can download at the point of the rental desk and be encouraged, whether that's through an excess reduction or potentially an excess increase if it's more stick than carrot, of speedy reporting. And that will drive a saving in your claims experience, statistically 20 to 25% cost savings if reported in 24 to 48 hours. On that same point, then getting the vehicle into the repairer network, the insurer repairer network can be a benefit. The insurers are probably the biggest customers to the garages in terms of car parts and the like, and therefore have a extensive network of suppliers and utilize it. So if it occurs, you're comprehensively covered. Put it into the insurer repair network, it will be a speedier return for you. In terms then of maybe determining causation in a claim, obviously dash cams can be a huge benefit. The video can speak for itself often. there's an impracticality of that, I understand, and getting them into the vehicles, not least the cost, is the challenge. But certainly where you have more prestige vehicles and certainly where you have passenger carrying vehicles, we would strongly recommend the inclusion of dash cams to avoid any non-fault incidents essentially landing in your lap. And also anything that can crash center alert. If you've got telematics on a vehicle, if that can alert you of an impact, you could in essence become the FNOL then of actually proactively calling the hirer to see what's gone on. So can be useful kit. From a theft perspective, obviously tracker is still the key tool. Certainly so. Also required if there are Range Rovers and the like in that fleet, ghost immobilizers are becoming a bit of a requirement now. But also yard security. We have seen an increase in break-ins for the theft of parts, as I say, and if they can get easy access without the fear of CCTV or alarm or physical security, it is making you potentially more on the radar. So certainly something to look at. In terms then of the renewal, starting it early, brokers should be out with you 2 months before. And what you really need to be looking at that is an analysis of the claims experience, but also invite the insurer in, where you've got no doubt the smart rental desk and the good yard that you're hiring out of, get the insurer down and to see that, because it just gives them a comfort that you're hiring to the right people, and that really is a key step. The rating of a policy, you'll have either a rate per vehicle, a percentage of rental revenue, or a rate per day. The question is always which one's cheaper. The answer is they should all really be the same, in that it's a premium calculated on a claims experience. But what it then does is it triggers the measure of that policy over the year, and they'll all blunt and all have their failings. Revenue, for example, you could just have an opportunity to increase your rates, but you're not necessarily hiring more, but all of a sudden you're paying a higher percentage against your premium, and that is unfair. So what I always recommend is that you actually look at all the measures and give it to the insurer, being how many vehicles, what the revenue, and what the hiring days activity has been. And therefore you can look at what is actually a true risk increase or deduction versus what in essence is a bit of smoke and mirrors, where, as I say, just because the revenue has increased doesn't mean you actually have more at risk to the insurer. So certainly I'd recommend looking at all those factors out of whatever rental data you have. Make sure that it's all put together. And in terms of analysing the claims experience, again, as much detailed scrutiny as you can do. Average age of the hirer you're hiring to, the use of the vehicle, a depot that may be having more of the incidents than another. We've seen scenarios where 10% of your rental income is driving 80% of the claims, and you can then target that 10% with risk management, maybe cameras, maybe tracking, rather than trying to cover the whole fleet in one go. So you just target the biggest number. And in that regard, we've even looked at areas where people have just ceased to do certain sectors of hire because of the claims it's driven. So very important to get that claim analysis put together, I would suggest. And yeah, that's me. Thank you, Amanda.
Thanks, Ali. That was really helpful. Certainly a whistle-stop tour and got us off to a flying start. I'm not going to speak for much longer. I'm just going to hand straight over to Biswajit from Coastr, who's going to give us an update in terms of technology and where that's going. So Biswajit, over to you.
Thank you, Amanda. Just to confirm, you can hear me correctly? Okay, I'll move on forward. So everyone, I'm Biswajit, CEO of Coastr. Just here to provide an update on some of the rental market and shared mobility trends that we are looking at, and also introduce a bit about Coastr. So for those of you who are not aware, we are a shared mobility software as a service platform. Fairly new to the market, but we've grown quite significantly across the board. We work with several different partners as well, but our vision is to help decarbonize the sector by providing more infrastructure and capability to enable shared mobility and usership models. And for that, we provide something quite end-to-end in terms of technology, providing all the code digitization and platforms that support a lot of self-service. But we also, as mentioned earlier, we work with a lot of partners and provide a lot of integration to different services across the market to create what we call as a software ecosystem for rental operators. The way we see the market today is what we call as the future is shared mobility. And increasingly, as we work with different types of clients, we see effectively the convergence of different types of asset sharing models. Now, historically, I mean, rental industry or rental model has always been there, but I think there's a growing number of interesting new models coming up. Especially in the consumer space, we see car subscription as a topic of interest. A lot of investments going into offering car subscription on the flexibility, and on the corporate side, we see an equivalent in the matter of what we call as flexi fleet or flexi rental, depending on the terminologies that are being used by different companies. But the main motto here is that consumers and corporates are looking for more flexibility when it comes to using mobility as a services. And some of the kind of interesting stats across the board, and this is not just specific to the UK, but because we work with a lot of global clients as well, we see some of these trends across the board. And much of this is based on kind of the flexibility and the requirements for more flexible solutions. And some of the kind of interesting stats that present to us are 60% of customers would rather hire or subscribe to a vehicle rather than buy one. And this is especially growing in a lot of new markets, larger markets. We see a increasing in adoption of such kind of models, not just in the consumer space, but also corporates who are increasingly relying on kind of shared mobility or vehicle as a service. Also, some of the other macro trends which are fueling this is a overall decline in kind of availability and shortage and longer lead times as well. And this was particularly high during the pandemic, but it has been slowly kind of evening out. But despite that, what we see is it has not gone back to the kind of same levels as pre-pandemic, and it's expected not to be. And it is driving a lot of different new distribution models, starting from the OEMs, which I'll talk about a little bit further down. But there is a big factor of kind of the availability of vehicles, which is driving people to use more and more of the shared mobility solutions or vehicle as a service. The other key trends or macro trends that are also kind of influencing shared mobility is a big focus globally around carbon emission. As you may be aware, 30% of global carbon emission is from automotive sector, from basically vehicles and cars. And this is one of the biggest kind of, what we call macroeconomic trend that everyone is trying to really control and bring it down, starting from switching to electric vehicles and finding different other mechanisms to almost change behaviors, change trips to deliver or achieve more carbon neutrality. So we definitely see carbon emission being the topic of agenda and driving a lot of shared mobility kind of solutions in the market. And finally, I think, again, historically, we've seen car sharing type of solutions have really delivered a lot of value, not just in reducing carbon emission, but also managing congestion. Honest statistics say that 94% of vehicles out there are just sitting idle, and a lot of the trips that are done through private cars, 45% of them, which only leads to more congestion in the city. So this has become quite a big prominent focus when it comes to planning for smart mobility and smart urban transportation. Finally, what we see is the market for shared mobility is massive. It is expected to grow or earn a revenue of $1 trillion by 2030. Especially kind of powered by the rise of kind of flex fleet and vehicle subscription, alongside, of course, more traditional models like vehicle rental and car sharing. Especially in large cities, we see more uptake of such solutions driven by lack of parking spaces and congestion, and also some of the government regulations which are forcing people to move away from private vehicles. But this creates a huge opportunity for the rental industry. Now, how is all of these really being delivered? And that's where kind of the trends and especially technology plays a key role. And of course, we have seen some of the government policies also really encouraging that, especially in the UK, we are seeing salary sacrifice has become a big opportunity to provide what do you call flexible models and offer more kind of greener vehicles to corporates and their employees to help them achieve their net zero targets. And especially the BIK benefits, there has been a real good uptake on salary sacrifice schemes. Similarly, across the board globally, we are seeing the popularity and rise of what we call as vehicle as a service or mobility as a service, and increasingly those are becoming more and more norm as a rental or fleet operator when you're talking to your customers. And interestingly, this is being something that major OEMs are venturing into, investing a lot of money. The more notable names, for example, are the likes of Stellantis Group, who have invested significantly into their Free2Move platform, which is effectively a shared mobility platform, and continue to kind of spend more and more money into that. Similarly, there are other notable brands like Renault who are working on similar concepts. They have a brand called Mobilize, which brings together different shared mobility solutions under a portfolio. We continue to see a lot of investments being made by JLR as well through their kind of mobility brands like Pivotal and Onward, and of course some of the other OEMs out there. Similar trends are also coming across the board from leasing companies, the larger ones like Avens, formerly ALD LeasePlan, and also Lexart Lease and Arval and Zenith, who are spending, again, a huge amount of money trying to converge all their mobility services under one banner to provide a seamless customer journey to their consumer and corporate customers. Final kind of trend that we are seeing is also the super apps who like Uber and FreeNow and Grab in Asia, who are also kind of converging into delivering all of these different services under one platform. Now, this is where I think we definitely see quite a lot of benefit for vehicle rental companies to really start considering these, because when it comes to shared mobility, a lot of the infrastructural and kind of market know-how already exists with the rental operators, and this effectively allows them to not only increase the revenue stream and offer and create a new pool of customer channels, but it also helps them really kind of improve their vehicle utilization and customer retention and customer journey management, which is fundamental, because as the mobility trends emerge further and further and the requirements change, it is going to be more and more vital to be able to provide more holistic services in future. Finally, the role of technology and data in all of this, as always, we live in a digital world, and effectively that's kind of where a lot of the investments are being made as well to really digitize operations. Hence, kind of demand for platforms like Coastr, who can provide end-to-end solutions. And primarily, I think, although in the industry there's always been a history of spending a lot in the customer journey and optimizing that, I think there's increasingly a desire now to really focus on back-end operations to make that more digital and more efficient. Hence, a lot of businesses are spending a lot of money to really look at their back-end processes, things like booking management, fleet management, billing, invoicing, using of telematics and collected mobility to become more efficient. But not only that, but it's also about how they all come together to deliver a more digital operations. The other aspect which is kind of important is technology does enhance the user experience, and hence we are seeing increasingly a lot of demand for self-service portals which can significantly again reduce cost of customer experience, but also provide kind of the necessary digital experience that consumers and corporates of the world of today are getting more and more used to by using the super apps that are available and accessible to them for different other solutions. Also, in this regard, I think connected mobility plays a huge demand or huge opportunity, rather, where working with the OEMs directly, a lot of software companies like Coastr, we are tying that experience back to the asset, to the vehicle itself, to deliver more holistic and seamless journeys. The third thing, which is kind of important and value add from the technology side, is data. As always, using the right technology and the right data assets allows you to get real-time insights into your customer journey and usage. And also it helps with a lot of risk management and understanding the profitability. This is particularly important when things like residual value is going up and down with electric vehicles. Having the right data really helps you plan your fleet profitability and remarketing, but also how you manage your cost more effectively with these. Now, finally, to conclude, technology will also play a huge role in achieving net zero, and this is where not just the digitization and paperless process is important, but there are regulations around ESG reporting and being able to demonstrate how small and large companies are achieving net zero. So again, the data and the technology will be very, very relevant to helping rental businesses achieving this. With that, I'll probably conclude the presentation, and thank you, and back to you, Amanda.
Thank you, Biswajit. That was really interesting and really insightful to hear sort of all the different areas that Coastr are working on. Thank you. I'm not going to say much more. I'm going to hand straight over because your last slide seamlessly links into our next presentation, which is Ben Horn from Omnevue. Ben, over to you. And ESG, why is it important to us?
Thank you so much, Amanda. And as you said, Biswajit, thank you so much. You've teed me up perfectly for this next segment. I'm here to talk about ESG and a spotlight on the rental mobility trends. And again, just to show that the impact of the automotive industry has a large impact on the global carbon emissions, but also just the way that there are so many touch points across the world from automotive perspective that you guys, it's very important to get involved. So the agenda is, what is ESG? Why is it important to you and your customers? How do you start? What are the top tips for 2024 and onwards for reporting? And then what do we offer? So basically, ESG came out of the old CSR methodology. And again, it started really in 2004 with a paper called Who Cares Wins. And really, it was an initiative from the UN to kind of try and get companies to start understanding their impact outside of just the financial reporting. Built on the Sustainable Development Goals that happened in 2015. So that was 17 goals used for sustainable development, but that was never really intended for corporate reporting. And prior to that, we had the Millennium Development Goals in 2000. So again, there's just been this landscape of ESG, as we call it, 1.0. It was self-assessed, unregulated, voluntary. And then really we've kind of defined the ESG 2.0 world, which is where we're at right now, which is it's regulated, it's mandatory, and it's accounting based. So that is a bit of the landscape of ESG. And for those of you that might not know the term, it stands for environmental social governance. If I move to the next slide, so just to point out that you are a vital part of the story. There are about 1.4 million SMEs in the UK, and they account for over 50% of UK business emissions. And so basically, if you don't think that you as a business are involved in this entire ecosystem, then you're kidding yourselves, because it's not just a large corporate game. And again, the regulation and compliance is going very much towards reporting for all companies within the UK. So you're going to be part of this landscape. And then again, just going with carbon emissions, as that's the most trendy part right now, is that your scope 1 and 2 emissions, so this is your carbon equivalent emissions, are part of mandatory disclosures, whether you like it or not. You're in some way part of the value chain, either through investors or through lenders or through large corporates that you are either customers of or in the supply chain of. So again, at some point, I'm guessing that your company has been involved in a request for ESG, whether that's from stakeholders or from external parties. So why is ESG important to you and your customers? Really, we try and explain it in 3 different segments. So your ESG problem explained. So we've got stakeholder expectations. There's a very big shift in customer, employee, government, regulators' expectations for businesses like yourselves. So being more conscious of the environment and social issues. So you need to get ahead of it, because basically if you haven't sorted it out, then the questions are going to be coming thick and fast and you need to stay ahead. Reporting is expensive and complicated at this current moment. So time spent on these ESG requests is better spent growing a business. What we've seen in the trend in the last few years is that companies have been spending many hours filling out ESG requests or sustainability questionnaires from customers, from suppliers, from the entire value chain. And this takes a lot of time and effort. And we want to make sure that this is going to be consistently reported and, again, easy to do. So that's kind of where we work into this problem. And then getting it right is not just about the compliance part, it's also profit making. So you can attract new customers, you can unlock new KPIs and value. Research has shown that companies with strong ESG practices outperform their peers in the long run and command a higher valuation. So as Biswajit was saying earlier, this is not just a compliance or reporting thing. This is also very important for your actual business going forward, and to go towards the market trends which are happening right now. And therefore, it's important that we have financial grade auditable ESG data, which helps your business grow. So as I had already mentioned, you can attract new customers. The ESG commitment by SMEs retains customers and attracts new ones. You can generate up to a 90% revenue growth from engaging with ESG and getting your metrics. You can increase your profit. ESG data can help SMEs optimize resources. So again, if you have an understanding of your energy consumption, your water usage, and your waste and travel, you can start to decrease your costs in the business, and you can increase your operating profit by up to 60%. You can access new capital. So there's a big landscape now of capital available for companies that are basically getting ahead of sustainability and ESG. You can unlock green loans, investor capital, and government grants and subsidies. So just in the banking industry, they have these new metrics called GAR and BTAR. And these are whether banks will be able to lend against green loans. And again, will give you a better APR rate from the loan that you've got. Also in the EU, the SFDR reporting for sustainable funds, you will be able to access new capital in many markets through engaging with ESG data. The last part is that internally as a business, you can retain and attract talent. You can attract more talent, create happier, more engaged workforce, and increase employee productivity just by starting to engage with the ESG landscape. So how do I start my ESG journey and the top tips that we provide for 2024? So the first part is just start. There is nothing negative that can come from gathering more data and connecting the financial and non-financial reporting across your business. You're already doing financial reporting, and this is just another part of what you need to start to do. The sooner you act, the better. So the sooner you have systems embedded to achieve compliance and you can gain a competitive advantage. We've seen that many companies that have started to engage with their ESG data have not only seen a massive uplift in their actual operations, but also can go out to a wider market and start to attract more customers. Also, having a strategic approach. Once started, you can embed a strategy that considers both short and long-term value. You can identify what would be material to an organization and its various stakeholders. So again, without that ESG data part, you can't then put the strategy in place to decide what will bring short and long-term value. It's also a great opportunity to upskill your staff. A collaborative approach we have found is always preferable. So data collection is a process that will require input from people across the entire organization. It doesn't just sit in one place. The most important thing that I would say is a top tip is that reliable and accurate data. Getting access to source data is essential to accurate reporting. It is time to raise the quality of non-financial reporting data to be on par with financial data. And this is key for 2024 to make sure that you have reliable and accurate data. And then the final thing is don't stress. ESG is a journey. So you are going to continue to fill those data gaps to identify areas for improvement and continually drive change in the business. So what do Omnevue offer? We are a SaaS platform that helps you to collect all of your ESG data and to report it. We make carbon equivalent emissions and ESG reporting easy, saving you time and money. We connect to your systems that already exist, such as Xero, QuickBooks and Sage, HR software, vehicle logs, etc. Our accounting engine then does the calculations and you have the results within days. So it's a pretty remarkable process, saving you time and money. And here are just some of the key new insights and KPIs that you can use to make better decisions at a board level, a strategic level. You can see we break it down into environmental, social, and governance metrics. So this not only complies with all required regulation, but again, is just really good for reporting and being able to get a strategy in place to move forward with your business. So Omnevue provides only financial grade auditable data, as I've said. It's consistent and comparable with financial data. It's compliance ready, so for new and evolving reporting regulations, not just carbon. It's aligned to the latest IFRS standards S1 and S2, which have come into effect from the 1st of January 2024. So every SME will be affected by this by the end of this reporting year. It's assurable data that auditors can test and agree to supporting documentation. Again, you want to dispel the fears of greenwashing, and this is basically the best way to be able to get the data assured. And then it's future-proof for integrated reporting. So eventually, the IFRS have stated that they want to put the financial and the non-financial world in together. So thank you very much, and I look forward to having a chat with you all later.
Thanks, Ben. That was really interesting. Yeah, lots going on in the ESG world this year that companies need to think about. We are running slightly over, so I might need to shrink our panel session a little bit, but I would encourage you to put your questions in the chat. And I'm going to speedily hand over to Catherine Bowen, our Senior Policy Advisor, and Catherine's going to give us a quick overview in terms of what our policy team are working on this year. Thanks, Catherine.
Thanks, Amanda. Morning, everybody. So yes, there are two major bits of policy that I wanted to draw your attention to. The first is on MOT reform. So you may recall that in January last year, the government consulted on changing the date of the first MOT, and they were looking at potentially changing it from 3 to 4 years. The consultation response is out, and they have now decided to stick with 3 years. But at the same time as running the consultation, they also had a call for evidence where they wanted to they were asking for views and also evidence on a wide-ranging number of questions, including questions around the scope and content of the test and what a future test might look like in light of emerging technologies. So following feedback that they received during that call for evidence, they've identified several distinct areas where they believe that there's scope for improvement. And they're now looking to engage with industry to continue the discussion on those identified priorities, what changes might be possible, and how these might be incorporated in practice. So the key areas that they've identified are there on the slide: electric vehicle testing, hybrid vehicles and advanced driver assistance systems, and automated vehicles as well. We still keep hearing that self-driving vehicles could come to the UK's roads as early as this year. So automated vehicles really aren't as far away as some of us might think. But there are some really good opportunities here. So as I said, we've already started to engage with the Department for Transport. We attended a workshop last month, And this is a whole series of regular engagement now that DFT is going to be having with industry. So if you do have any feedback at all, any interest in that sort of future technologies and how the MOT test might need to evolve, let us know. But also if you have any broader issues or concerns around the MOT, then we can certainly feed that in during our discussions as well. So my email is there. It's catherine@bvrla.co.uk. If you have any questions or would like to get involved, please let us know. The next bit of policy that I wanted to draw your attention to is the zero emission vehicle mandate. So this was introduced in January 2024. And this is where manufacturers have to sell a rising proportion of zero emission vehicles each year until we hit the phase out target. So by 2030, 70% of vans and 80% of cars, new sales, will need to be zero emission. I think it's going to be a very interesting first year. So we had an event a couple of months ago looking at the zero emission vehicle mandate and some of the behaviours that potentially it might drive. Manufacturers have got flexibility, so they are allowed to bank and or borrow credit. So banking, without getting too technical, banking is if they overperform, they can bank for subsequent years, and borrowing is if they're not meeting their sort of targets, then they can borrow from other manufacturers. So we think this might drive some really interesting behaviours, and we're really keen to hear from members about how the ZEV mandate is playing out in practice. So please do let us know. You may be aware that manufacturers get extra credits for vehicles that they sell into car clubs. So again, we're really keen to hear about how that's playing out in reality. And then potentially we're looking at pushing for an extension of that additional credit for rental. We know that demand is a challenge at the moment, zero emission sort of rental utilization and things like that. But potentially this is something that we could push for in time for when the government do their review, which they've committed to do in 2027. But any views, please do let us know. Very conscious of time. So just touching on some of our active campaigns, hopefully you all saw that last month we launched our zero emission van plan. And we've done this in collaboration with a number of partners. So we work with Logistics UK, Recharge UK, which is part of the Renewable Energy Association, the Association of Fleet Professionals, and the EV Cafe. And these were all partners with similar interests to us in this space. And we really wanted to highlight some of the ongoing challenges that the van sector is facing when we look to shift to zero emission vans. The key areas within the van plan touch on increased fiscal support. So there are a number of asks for government. So on the fiscal support, it's asking for an extension of the plug-in grant and also support for SMEs to purchase used BEV vans. There's some parts around charging, both public charging and making the regulations work for vans, but also private charging, where we know people quite often have a challenge with getting the grid upgrades, not just the cost, but the whole process. So we've asked for a new fund to help cover the costs where people are looking to put that infrastructure and they have to upgrade the grid capacity at their depots and rental branches. So a new fund to help with that, but also guidance to help people understand and navigate the process. And we are doing some work in that area ourselves. And then the final ask was remove regulatory barriers, where we focus very much on the changes to the 4.25 tonne derogation. So this is where additional weight has been allowed. So drivers can drive up to a 4.25 tonne van on their category B licence. But the issue is that other regulations haven't kept pace. So if you do drive a 4.25 van, it means it has to be MOT'd like it was a HGV rather than a van. And it also means that it's subject to EU driver's hours. So there are restrictions on how far that vehicle can drive beyond its base. So we're looking to work with government to get some of those changes so that there is that regulatory alignment and it makes people opting for a 4.25 tonne van much more appealing. The second active campaign that I wanted to draw your attention to is our industry champions. So obviously we are in an election year. We are keen to engage as much as we can with MPs and candidates across the country ahead of the election so that they can think about fleets and they understand the importance of our industry. We want to recruit members as industry champions. I mean, if you think about your rental branches, these are in the heart of communities. So if you can encourage your local MP or candidate to come along and engage with you, to hear any of your concerns, to promote things like the Future of Fleet Manifesto that we launched in September last year. This really is a golden opportunity and would help us immensely by helping with that outreach, by utilising the resources that you have across the country. More details are available on the website, but we really would like you to get involved. We would help you throughout the whole process. We can facilitate the visits, we can do briefings, we can write some of the letters. There's more on the website, but please, again, do get in touch if this is of interest to you. And then finally, I just wanted to touch on some of our latest research. So 2 weeks ago on Thursday, we launched the latest fleet-friendly charging index. This is where we do a freedom of information request to all of the upper tier local authorities, asking how many of them have got EV infrastructure strategies, how many have got dedicated points of contact, and more importantly, and more of interest for us, how many of them are actively engaging with the fleet sector. We've seen improvements. So this is the second year we've done this, and we've seen improvements, particularly with those with EV strategies and dedicated points of contact. We had seen some improvement with the numbers engaging with fleets, but it was still over 60% of local authorities saying no, they've not engaged or considered the needs of the fleet community. We also have a fleet-friendly charging pledge where we encourage the local authorities to sign up and show that they are willing to engage with the fleet sector. We've got 5 local authorities who are signed up to that, and it very much works alongside the charging index. So please do take a look. If you are engaging with local authorities or local councils, please do raise their awareness about our latest findings and also the pledge. And then our Road to Zero report card, this is now in its 6th year, and this is where we do an annual assessment of where we are for cars, vans and trucks, looking at supply, demand and infrastructure. Last year, we started to look at KPIs where we could really start to measure some of the progress that was being made. We're going to be holding some workshops with members to make sure that those KPIs remain relevant, and also to look at any emerging or key themes that we need to reflect. And then we'll be launching this year's Road to Zero report card at our Fleets in Charge conference, which will be held on the 10th of July at the QE2 Centre in London. And then if I just flick on to the last slide, just to raise your awareness about some rental research that we're doing. So this is the first piece of detailed research that we've done into the rental sector since 2018. We've recently commissioned a company called PA Consulting, and this is very much designed to influence policymakers both at local and national government level about the valuable role that rental can play. There are a number of emerging key themes. Again, we're going to be sense checking these with members, and if you'd like to be involved in those workshops, please do let me know. But the key themes that are emerging are the value that rental plays in terms of the focus on the environment, path to sustainability, the impact that it has on the economy, but also resilience and delivering social value, particularly in terms of some of the behaviour change elements that shared mobility can bring. And then in terms of the research objectives, this is to provide data that will raise the profile of the rental sector, particularly highlighting its importance to the economy, to create an understanding of the rental sector, including the different market segments. So when we are engaging with local and national government, they understand how rental operates and its constituent parts. It will crystallise the role that rental plays in reducing private vehicle usage, and also establish the rental sector as an enabler of road transport decarbonisation. So this is where we want to really look at some of the CO2 savings potentials that rental can bring, and then evidence that when we're engaging with policymakers. The final report should be due out late April into early May. And as I said, if you'd like to get involved and hear how this is taking shape and also feed in some of those emerging themes, please do let me know. I'll leave it there. Thanks ever so much.
Thanks, Catherine. So much going on in the policy space at the moment. I think it's really interesting to hear what you guys are working on. And I think also I took away from that, our rental company should really get involved with the work that we're doing. If MOTs are causing you a headache, let us know. Catherine put her email address there, but I'll just reiterate that. It's catherine@bvrla.co.uk. Let us know. And if you want to get involved with the MP work as well, we're really interested to hear from you. So we are running a little bit behind, but we have got a couple of questions. So I'm just going to bring, hopefully I'm not going to bring, Helen is going to bring our esteemed guests back. Great, thank you. There's one question which I don't actually think is for any of you guys to answer. It's one for us to take away, but it's around what is happening in the gap market. FCA are not treating the customers fairly. They talk about vulnerability. There are now a lot of vulnerable customers out there. Ali, I'm guessing that's not your area, but just wanted to double check.
No, it wouldn't be. Sorry, no.
No, that's what I thought.
You can certainly have the question, and I can get you into the right people, certainly. Yeah,
we're in regular dialogue with the FCA. I know Sashi, our head of legal and membership, is in regular dialogue with the FCA, as is Tom McLennan, our senior head of policy, and just understand what they're doing around that gap product. I know obviously it was withdrawn with very short notice, which isn't ideal for a customer perspective at all, but we'll keep you updated and let you know what's happening there. Ali, this one is for you. Great presentation. Did you say there are specific apps for the client to report directly? If so, can you recommend any?
Yeah, so claim reporting app very much is recommended, and a lot of the insurers in the sector provide that resource now. We as a broker certainly provide one, a Towergate First Assist app, and the logic is that on a QR code at the rental desk, hirer can very quickly download it and incentivize then in essence to report the incident as quickly as possible. But if nothing through the broker, speak to the insurer, and because it's very much their drive for this, they should also be able to assist with that tech.
All right, brilliant, thank you. Biswajit, I just wanted to ask you around sort of the AI side of the product. Obviously, there's a lot, I think there's a new article about AI and how it's helping businesses every day at the moment. Is there anything in particular with regards to your product in terms of AI and what that looks like?
Certainly. I mean, of course, it's a new evolving field at the moment, and typically, artificial intelligence or generative AI is applicable when there's large amount of volume of data, which can be then utilized in different ways. A couple of areas where we are making some good use cases or finding some use cases. One is in sort of risk management, like in really understanding how to predict risk. Some of it relates to insurance as well, because we are working with several partners and really understanding how the asset is being used, utilizing different parameters like alerts, engine alerts, or crash detection alerts, and in general, kind of GPS based location data to predict risk. So that's an interesting field where AI could be particularly really interesting, because telematics and connected mobility data presents huge amount of information. In the past, telematics company have just presented that information back to the operator, but being that volume of data is not really useful operationally, because it just overwhelms them. Whereas we can use AI to make it a bit more meaningful and connect that to the process. So that's one aspect which we are looking at. The other one is just, I guess, looking at customer journey, demand management, and really understanding the customer insight, and being able to sort of price better and increase your revenue. So definitely pricing will play a different, very different role as new mobility services emerge. And while there are some good kind of what you call sources where historically there have been kind of companies providing insights on competitor pricing, etc. As new mobility services emerge, those are still lacking out there. So again, AI will play a big role in helping to provide that kind of competitor insight in the future.
Okay. I think that's really interesting what you were saying about data, actually, because that does feed into what Ali was saying as well, isn't it? About it's how you present, when it comes to insurance renewal, how you present your business, how well you know your customers seems to sort of be a kind of common thread that I've picked up this morning. It's more and more now where we need to know about who our customer is, what they're interested in, what they're doing, and how that works. Ben, I wanted to come to you quickly, just around the comments you made around the access to finance and things like that can be opened up through ESG reporting. And if a rental company was wanting to sort of find out more about that, anywhere in particular you'd recommend they go?
Yeah, so it's been on the landscape in terms of with the actual change in regulation for banks and for investment funds. And so really they're hitting another, if they're reporting on ESG, they're hitting another criteria that they would need to go through in order to get access to this funding. More than happy to have a discussion with people. We can point them, certainly say which way or which banks, etc., are doing certain things. But again, if anyone has any questions afterwards and wants to reach out, then please just drop me an email or give me a call, and happy to try and help.
Oh, brilliant. I'm really sorry, but I feel that given the time, I'm going to have to cut the panel a bit short and probably not do as many questions as we would have liked. Hopefully, everyone found the session useful. I would really just want to thank my panelists today, Ben, Alistair, Biswajit, and Catherine. Thank you so much for presenting and giving us an insight into what you guys are doing this year. Really interesting. I'm hoping that everybody took away a few nuggets from all of those presentations. I certainly have taken away some thoughts and insights about what to be looking at for the next couple of months. Thank you all for attending the webinar this morning. I'm really sorry that we ran over a little bit. We were trying to get this done in 40 minutes, which I think was possibly a bit optimistic. I just wanted to highlight to you our events calendar for the rest of the year, particularly the vehicle and fleet management forums and residual value and remarketing forums that we do. If you wanted to attend any of those, or our Fleets in Charge conference, we do have a SME rate for that Fleets in Charge conference. If you're interested in attending, head to our website for more detail. And please let us know what you thought about this morning. We'd be really interested to hear, did this hit the spot? Is there other speakers you'd like to hear from? Any topics you're interested in covering in this sort of quick hour-long session that we've done this morning? We're really happy to try and replicate this for you again. And thanks everybody for listening. Bye-bye.